A few years ago, I was in New York City. My wife was able to join me, and we went to one of these upscale New York fancy restaurants. And I just remember looking over the menu, wanting to make sure that whatever I ordered, it was the best thing possible. I wanted to savor every single bite. So I want to make sure I had the best entree, the best appetizer, the best dessert. I wanted to enjoy every single bite. And I knew that if I made the wrong order, if I picked the wrong item off the menu, that I would regret what I ordered the rest of that night and the rest of that trip. Like, there is nothing worse than that. All right, maybe you can relate to that, or maybe you've been in a situation where you had buyer's remorse, that there's something that you thought you needed, something that you thought you wanted, and you made a mistake, or you couldn't make a decision because you didn't want to choose the wrong thing. When it comes to investing, that happens all the time. Many people get paralyzed because they don't want to choose the wrong investment, because there are so many different options that exist. And a recent reader question just echoed this to a T. This person wanted to invest, they were confused in all the different options, and they just didn't do anything. So today I want to show you what this reader question was. I'm going to read it to you, and then I'm going to give you my response in case that you are stuck, making sure that you choose the best investment option for you. All right, so let's check out what this reader question is right now. Let me tell you, I can relate to this because there was a time when, I mean, even to this day, like, I still mull over investment decisions. I want to make sure that whatever I'm doing is the right thing, that I'm going to make the most money I can, especially when it comes to picking individual stocks. There are so many great opportunities that once you find a stock that you think that you're ready to buy, that you think it's the right time before it's either you're buying it on a dip or before you think they're getting ready to explode in this certain industry or market, whatever. Like, when you finally get that point where you're ready to buy and invest into whatever stock or mutual fund or ETF or whatever that is, and you get to that point where you're ready to pull the trigger and you realize, crap, well, maybe there are other better stocks, there's other companies, there's other opportunities that I may miss if I put my money into this one. I mean, these are all the things that happen right before you make that initial purchase, that initial investment that most people don't think about, and you don't think about it until you're right there. And I know I have been there every step of the way, so I can definitely relate to this person that is struggling making this investment decision. All right, so let's find out what this question was from this reader. So here's the question. Question is, hey Jeff, I've heard about mutual funds, I've heard about IRAs, Roth IRAs, etc. All of these are so confusing. I want something low risk and I can get my money out when I need it. I love that. I want to make some money, I want to make some return, I don't want to lose any money, and I want access whenever I can get to it. Okay, let's keep going. Can you explain the difference and the best investments to use? Thanks. All right, so as you can see, this person, they're a little bit new to investing. They still have a little more to figure out, and that's okay. So let's see if I can answer this question to the best of my ability that we all can benefit. So let's address the risk question first. Basically, if you want to invest, there is no way to get around the risk factor. There's going to be risk involved. The only way that you can avoid risk is if you are going to some sort of insured investment. We're talking banks, CDs, money market. There's risk, there's always going to be risk. So the fact that if you think that you can invest your money into something that there's going to be no risk, that is what we call a pipe dream. It doesn't exist. There's always going to be risk. Now, getting your money out whenever you want it, like, that is something that is available, but you have to understand that if we are investing it into mutual funds, stocks, ETFs, yes, you can put your money in, yes, you can take your money out, but is it gonna have the same value whenever you go to cash it out? For example, if you're buying stock in Facebook and it's $185 a share, and then the day comes when you want to sell some of that stock and get your money back, and it's only worth $165 a share, well, now you're not going to get all your money back because the investment has lost value. Same rule applies with mutual funds, ETFs, whatever. So any of those, yes, you have the liquidity. You can get access to those, but it's subject to market risk. There's also transaction costs. You know, depending on where you're holding the investment, there is going to be some cost to sell it. If you're using like an online broker, like a TD Ameritrade, E-Trade, Ally Financial, any of these, some of these apps like Robinhood, you're gonna have lower transaction costs, so that's a good thing, but there is potentially still some cost involved. Now, the other thing that you mentioned are Roth IRAs, IRAs. Now, you have to realize that these are not investments. These are just accounts that you can place different investments in. For example, if you want Facebook stock, going back to that example, you can buy Facebook stock in a Roth IRA, in a traditional IRA. You can buy that in a online brokerage account. So you can buy all these different investments and place them in these different types of accounts. Now, with these accounts, depending on when you have access to them is when you plan on retire. With the Roth IRA, you can get access to that at any time. It's just any interest or earnings that you make off those investments that you have to leave until retirement. The traditional IRA, you're getting a pre-tax tax benefit, tax write-off, so you have to wait until retirement age, which IRS says is 59.5, so that is a much longer term thing. If you want more information on the Roth IRA, you can check out a Roth IRA Millionaire video that I did. I'm a big fan of the Roth IRA. I think for a younger person, I think it makes a lot of sense for a lot of reasons, and you can check out that video to learn more about that. Really more that I look at that question and understand some of the reasoning behind the questions. It shows that you know you want to invest, you probably know you need to invest, you have no idea how. No one has shown you, no one has guided you, no one has talked to you about the risk in investing. So with that, that's why I love platforms like an Acorns that's just taking all your spare change, you know, and putting that into investments. That's why I love like Betterment or Wealthfront, that you are putting your money in and they are choosing the investments for you, utilizing ETFs, you know, for those investments. That way, initially, you don't have to worry about choosing the investments. They're gonna do that for you. So that way you get invested, that you start taking advantage of market appreciation and dividends and interest and all that. And then you can learn, you know, what these ETFs are, how they work. You know, when markets go up and down, you just start seeing like how it all works. You're just basically dipping your toe in the water to get a feel what it means to have market risk, a bull market, a bear market, everything that goes along with that. So that's why I love platforms like that allow you to invest without really thinking about it at first. But that doesn't mean that I don't want you to learn. Like, I don't want you to take a passive approach and just put it in there and forget about it. You definitely want to know what you're putting your money into and learn about it. So that would be the one thing I would tell you, is that find a platform that allows you to get your money in, so where you can learn about the market, become more experienced, so that way when you get real money, a lot more money, and you're investing, now you know what you're doing, you have so much more knowledge, experience, that you can now make some serious gains. All right, as you can see, when it comes to investing, like, there are so many different options, and risk is one of those things with these options that you're not going to avoid. Like, you cannot avoid risk. It's going to be there no matter what you do. But as far as account types go, you have a lot of choices: Roth IRAs, traditional IRAs, all that fun stuff. There's a lot to know, but the best thing that you can do is just start. Get started investing, learn how it works as you go. And then as you go, as you learn, man, you gain so much more knowledge, and you just know a lot more, and that's when you start making some serious coin. All right, hope this was helpful. Until next time, this is Jeff Rose reminding you that it's your money, it's your life. Get started investing. I don't care where, just get started. Until next time, peace.